Mayuresh Joshi is with us, Head Equity Research at William O'Neill. Mayuresh, you look at these stocks and you look at your portfolio, and if you own a lot of these stocks, or maybe even one or two, you feel happy. Otherwise, there's some, I'm assuming, serious sense of FOMO being created out there.
Afternoon, Prashant. Absolutely. I think the broader markets have been on a roll. And what we've been seeing specifically in terms of either result reactions or any announcements related to a particular company in general, or sector announcements which probably gave a lot of tailwinds, like wind companies that you were just speaking about. I think the move in these stocks is humongous. So yes, I think anybody who has a clutch of these names will be extremely happy at this point.
Mayuresh, Suzlon was a forgotten stock. It was shunned by investors. The stock price was languishing in single digits. But now investors are also taking note of it. Early in the morning we had Ashwini Agarwal of Demeter, and he didn't name stocks, but he did talk about how wind, energy companies are getting fairly interesting. And particularly on Suzlon, he spoke about how the recent fundraising, the restructuring program has improved their balance sheet quite considerably. And I was taking stock. The debt on Suzlon's book was 13,000 crore rupees in FY20, and it's come down to less than 1,200 crore. That's a big decline we've seen in the debt price. 13,000 crore FY20 has come down to 1,180 as of FY23. And plus there have been, government schemes like, I think Panchamrit, which are promoting the use of renewable energy. Are you now going to start looking at names like Inox and Suzlon?
Afternoon, Rima. Yes, I think names like an Inox Wind, Inox Green have started appearing on our filter lists at O'Neill. Two, three things, as you rightly pointed out. One, I think in terms of the entire perspective related to renewables, 50 gigawatts expected to get added over the next 3 to 5 years. I think that is probably the target setting, wherein 10 gigawatts will be towards wind itself. Now, the details in terms of the contours on what is probably expected to happen, e-reverse bidding expected to get off, which means better tariffs. You're probably expected to see all the 8 wind states probably get a fair share in terms of construction happening at their end. And therefore, with the removal with the removal of the interstate charges as well till 2032, a lot of new projects will come on stream. Now, what happened really in the period between 2015 to 2020, tariffs were lower and input costs were far higher, which created a huge dent in terms of a lot of these wind company balance sheets. But really, I think with things expected to change, with new policy regulations expected to come through, a lot of capex expected to come through from corporates, and a lot of order wins expected to come from state regulators as well. I think we're expected to see a fair share coming to these companies itself, which improves their cash flows. And obviously, with better dynamics working onto their balance sheets, the return ratios improve as well. So I think a couple of these stocks, Inox Wind, Inox Green, have started appearing on our filter lists. But along with a lot of these ancillary players, Rima, have also started moving in tandem. You look at stocks like a TD Power as an example, which probably gives generators, turbines for renewables, both thermal and wind and solar players as well. Players like an APAR, for example, which had a humongous run over the past 12 to 15 months, which does a lot of work in terms of wires which are related to the renewable space itself. So I think a lot of the ancillary players are also moving in tandem with the core players itself.
Other names as well. Tata Communications has moved higher. Mayuresh, any view on this one?
So frankly, I think have not been tracking this one. But at O'Neill, I think we've got a couple of stocks which we are probably keeping on our radar at this point of time. AI Engineering, I think the numbers were very decent, Nigel, in the quarter gone by. Our own take in terms of volume growth should be reasonable for the next year as well. Expectations in terms of margins coming off a tad bit with input costs coming down will still mean that with improved volumes, operating leverage plays onto the balance sheet, more than 750 crores in terms of orders. I think this is one stock that we probably like. And within the same space or the same breadth itself, ITD Cementation, I heard the management interview with you, Nigel, a few days back. Our take in terms of the growth that they are envisaging for the next financial year in terms of top line, more than 35-40%. Margins expected to improve quite significantly, decent amount of order book, and improving cash flows should probably keep this stock in good stead as well. So I think financials within that NBFCs, a few of these domestic cyclicals is something that is propping up on our sectoral rotation.
Any thoughts on TeamLease, Mayuresh? Do you look at that company?
Yeah. So I think the expectations in terms of hiring expected to continue at a reasonable pace. The numbers have been pretty reasonable so far, but the expectation in terms of dynamics expected to improve if you've got a longer term horizon over the next 2 to 3 years with stable margins. I think that is something that probably should keep the stock in good stead. Now, what really will be a defining factor will be how the first half probably plays out. You've seen a lot of traction that was probably happening a few quarters back when it came to the IT sector as a whole. But outside IT, again, I think things are picking up slowly and steadily. And therefore, I think the core services business should improve, leading to better numbers going forward. So I think Q1 will be a defining factor. The stock has been under pressure over the last 1 year, and therefore Q1 numbers will be a defining factor.
All right. Thanks very much for that, Mayuresh. Good speaking with you.